Hello and welcome to today's Explainer. I'm absolutely thrilled to have you here. Look, we're going to dive right in because we're looking at a fascinating and honestly pretty urgent theory from the analyst at ITM Trading. They're sounding the alarm on a massive impending global financial shift. They call it a global monetary reset. Our goal today? To unpack their analysis. We'll break down exactly what they believe is coming, how it's going to impact our fiat currency and our debt, and most importantly, the exact role that physical gold and silver will play in surviving it.
So, to kick things off, let me ask you, what actually happens to your money if the global financial system resets? It's a provocative question, right? And according to our source material, the warnings are pretty dire. The analysts argue we're currently on a fast track toward a severe devaluation of fiat currency. We're talking about a scenario where everyday savers could literally see their wealth compromised overnight.
Here's our roadmap for today's explainer. First, defining the monetary reset. 2. The realities of reset day. 3. The myth of disappearing debt. 4. Gold in an economic collapse. And finally, preparing for the aftermath. Let's get right into it.
Section 1. Defining the monetary reset.
So what exactly is a monetary reset? Well, ITM Trading defines it as a global financial process that culminates in an official devaluation of a currency. And the whole point of this? To save a failing debt-based financial system. Now, you might be thinking, sure, that happens in places like Venezuela or Mexico, but not here, right? Well, the analysts argue the US dollar is absolutely not immune to these exact same patterns. And it's crucial to understand that they don't see this as some random out-of-the-blue shock. It's a drawn-out historical process.
In fact, the sources identify a very specific four-stage trajectory. Step 1, the overprinting of currency, which severely waters down the money supply. Step 2 is what happens next, a massive loss of public confidence, which leads us to Step 3, hyperinflation. Finally, Step 4 hits. When things get bad enough, a government swoops in with an official decree to revalue the currency. Now, the propaganda machine is going to frame this as a heroic rescue mission for the public, but the sources argue it's really just about the system saving itself.
So where are we right now in this cycle? The analysts point out some massive warning signs flashing red as we speak. We're looking at accelerating interest payments on the U.S. national debt, rising bond yields, and foreign nations literally moving away from holding U.S. debt. The real kicker here, the unique catalyst speeding this whole cycle up today, is the sheer, mind-boggling amount of interest we are currently paying on that national debt.
Section 2. The realities of reset day.
You know, most of us look at our checking and savings accounts and think, okay, my money is perfectly safe. But the analysts sharply contrast that comfortable perception with the harsh reality of fiat currency. US dollars are not backed by physical gold anymore. They're backed by nothing but the faith and credit of the government. In the event of a reset, the sources argue that you and I have absolutely zero recourse. The Federal Reserve can basically do whatever it wants, and everyday people, we just won't have the power to fight it.
To really put this into perspective, the analysts present a terrifying hypothetical scenario. Imagine a 10-to-1 currency revaluation decree. Let's explore exactly what that would mean for you.
Think about this. If a government decrees a 10-to-1 reset to roll out some new currency, someone with $1 million in the bank on Monday wakes up on Tuesday with just $100,000 in actual purchasing power. A $50,000 safety net? That becomes just $5,000. The sources warn that the wealth you have stored up in the traditional banking system could be drastically and completely legally wiped out overnight.
And if you think your 401k is safe, think again. The sources warn that the collateral damage extends to absolutely anything denominated in US dollars. Your bank accounts might not just be devalued, they could be temporarily frozen. The stock market would historically tank, and real estate values plummeting. Basically, anything tied to the fiat system is at extreme risk during this transition. Moving on to Section 3, the myth of disappearing debt.
I absolutely love how the source material puts this next point. They say, betting on your debt disappearing in the reset is like betting on a three-legged mule at the Kentucky Derby. It's a hilarious and incredibly memorable analogy, but it illustrates a crucial point. Hoping a massive financial crash will just magically wipe out your mortgage or your credit card debt, that is a fundamentally losing bet. So why won't it just disappear? Well, the analysts explain that, sure, the government might be able to inflate its own national debt away, but banks and financial institutions, they are not going to extend you that same courtesy. Consumer debt is tied to legal contracts, and those contracts contain clauses that literally allow the banks to rewrite the rules. The bottom line is that these institutions will make absolutely sure they still get paid. They'll adjust the terms to protect themselves, and the consumer gets left holding the bag.
Okay, Section 4, Gold in an Economic Collapse. This is absolutely central to the analyst's entire strategy.
The analysts draw a hard, fundamental line here between what is just currency and what is true money. They view fiat dollars as mere currency. In fact, they go so far as to call paper money garbage or confetti because it's just so prone to endless devaluation. In stark contrast, physical gold and silver are categorized as true money. Why? Because they carry actual intrinsic value. They've been trusted as a store of wealth for centuries. So when the economy is collapsing, physical precious metals serve as the ultimate financial lifeboat.
But how do you actually use them during a collapse? It's not just about blindly hoarding metal. It's about having a strategy. The sources outline very distinct roles for both metals. They call silver the daily driver. It's highly practical. It's meant for everyday utility, like paying your property taxes when the dollar is failing, or just handling everyday bills. Gold, on the other hand, is the anchor. It's the heavy lifter designed to preserve your bulk wealth. It acts as a massive insurance policy that gives you absolute peace of mind when the traditional system completely breaks down.
And here's the really exciting part. It's not just about surviving, it's about opportunity. The sources argue that by holding true money, like gold before the crash, you position yourself perfectly post-reset. You can actually swoop in and scoop up severely depressed assets, real estate, and businesses at an absolute fraction of their previous cost. The sources even share anecdotes of people in other countries who survived major currency devaluations and actually came out much wealthier on the other side by using this exact strategy.
Finally, Section 5, Preparing for the Aftermath. Now, the sources firmly reject this idea that precious metals are only for the elite. You really don't need to be wealthy to get started. They emphasize that simply buying one single physical silver round, just holding it in your hand and feeling that it is real, tangible money, that alone kickstarts a crucial financial awakening. It gets you asking questions, checking prices, and really educating yourself completely outside the standard fiat narrative.
To prepare properly, the analysts insist on a few fundamental mindset shifts. Number 1, stop trying to perfectly time the crash. Nobody knows the exact date, so it's way better to just be protected early. Number 2, recognize the hard truth. When forced to choose, the Federal Reserve is going to save the banking system, not your personal savings. And number 3, you have to prioritize moving at least a portion of your wealth into physical assets that live entirely outside of the traditional banking system.
So I want to leave you with this question today. When the global system forces a reset, will you rely on their rules, or will you have secured your own true money? The sources make a wildly compelling case that relying on the exact same system that created this debt crisis is just a recipe for disaster. It is certainly a lot to chew on, and I highly encourage you to take a hard look at your own financial setup with these theories in mind. Thanks so much for joining me on this explainer, and remember, keep questioning the system.